bring 'em out, bring 'em out, bring 'em out, bring 'em out. It's hard to yell when the barrel's in your mouth. Bring 'em out, bring 'em out.
Hey guys, how we doing? What's up? What's going on? It's Chase, ever bullish, coming at you with a sponsor, a real life sponsor. Pretty cool. I've been shouting them out a lot. It's ivy.fm. Go ahead, check it out. Download the app. It's the best podcast discovery app. I'm going to tell you about how I use it and my trading here in a minute, but I got to get some people to download it first. If you want to help me out, the best thing you can do is engage with the sponsor. So shout out ivy.fm. Most of all, let's bring them out. We got a lot of good stocks this week. I've got a very good hypothesis for you. We're going to make a lot of money. It's a beautiful sunny Sunday. I just had Mexican food. I'm on one. I'm on a roll. I'm feeling good. I want you to be too. So let's get to it. Don't forget, @everbullish on Instagram. I'm now sending out my trade tickets on Instagram. Kind of get some cross promotion, cross following. And keep growing the message and spreading the good word to retail investors like you. So check out the Instagram. With that, let's do it. Let's do what we always do on the Sunday recap. Let's hit it up, huh? everbullish.com. We're going to click on investing articles. I just posted this. We got a picture here on the left. It's 7:25, so almost here at the end of July. It's hot. It's getting hot here in Texas. We got a big earnings week ahead, guys. Here's how to trade it. If you've been following along, you've been crushing it with me, we're going to turn risk back on this week. So just a big headline for everybody out there. Risk is now back on. I ain't afraid of the Fed. I ain't scared of the market. I'll tell you why here in a second. What do we do as traders? We look at the stockbroker's almanac, the stock trader's almanac. You can buy this at the link in my description. This is one of the best tools that there is. Always have your calendar handy when you're trading as well. And let's see what the almanac says. This is my first time reading it with you guys. If you're ready to give up everything else to study the whole history of the market as carefully as a medical student studies anatomy, and you have the cool nerves of a great gambler, a sixth sense of a clairvoyant, and the courage of a lion, you have a ghost of a chance. Dude. I mean, that's your boy right here. That's Chase at Ever Bullish. Bernard Barucci, financier, speculator, statesman, presidential advisor, 1870 to 1965. I don't know, 100 and something years ago. I don't know how relevant that is. But that spoke to me there. Anyway, not a lot going on other than bearish Wednesdays, typically halfway through the week. So remember, when you buy this, you can look at bearish signals and bullish signals, historically speaking, over the history of the market. So go get yourself one of these. These things are fantastic. I saw a tweet the other day that said those who do not follow the history of the market are bound not to profit off of it. Whatever that's worth. Anyway, back to the website. That's the Stock Trader's Almanac. So happy Sunday, bulls. This week is going to be a big one, my bulls. I wrote that twice. I wanted to make sure that you guys were getting the point, and I was thinking about this video when I was typing this. I'm flipping my prerogative to risk on stocks. So risk on, as you know, non-dividend, non-consumer staples, speculative stocks will make money this week. And here's how we're going to play it. Very, very bullish on TQQQ, which is the triple on the NASDAQ. Why? Remember, the NASDAQ number 1 and 2 holdings are Apple and Tesla. Those are also some of the biggest companies in the tech space. Those are also some of the companies that are what? They're reporting this week. So that's basically it. I just let this be easy. Let it be an easy trade, baby. That's what TQQQ is. That's the triple leveraged bullish side of the NASDAQ. So I have a double buy on UP. I have a double buy on ERX and a double buy on LabU. I'm also going to go over UWMC, United Wholesale Mortgage Corporation, which I'm considering adding to the Ever Bullish One portfolio and throwing out a stock here. And on Wednesday, I'm going to let you know what that trade is. I already know what I'm going to do with a piece of it. We're winning so much right now. There's only a tiny little tweak, And why not add a company that has a 4.8% dividend yield that's trading at an insane discounted value for the second largest mortgage company in the United States? LabU, rinse and repeat. There's going to be a lot of broken record on this. And the reason is that it's working to perfection and you don't stop until it stops. So anyway, oh yeah, and don't forget, I knew I was going to forget. Don't forget ETHE, Ethereum, the Grayscale Bitcoin Trust. Told you that was going to work out, and it's worked out as well. So, all right, what do I have here? Let's go. Let's revisit the heat map from last week, shall we? By the way, there's some hater on my comments down there about this not making any sense. If this doesn't make sense, you go read a couple more articles or go try to find maybe a little bit more of an elementary explanation. What I'm saying here is that when the heat map is red and there is a ton of outflows that you do not consistently see continuing, that's an upset market, not a systemically broken market. Therefore, there is now opportunity in said stocks. I used a sports analogy. I'm not going to stop doing that. This is my website. No, this is what I'm not doing that. So straight up, the point is that buy the red stocks. If I need to make it that simple to you, buy the red stocks on days that you don't think the market's really throwing a tantrum and the red stocks are down. Okay, that fired me up. All the other bulls out there are probably fading a bit, but don't fade on me. Don't fade me, bro. This is just a repost of what happened last week and why. So remember, SOXL, 3-time semiconductor, is still a no-brainer. If you hold that, I know it's somewhere around 41. It'll hit 45 very, very soon, probably next month. But this week, even more than that. So if you're not in, but you want to trade and follow me, TQQQ, it'll be a 6% trade this weekend. Once it hits 6%, I'm cashing out. I'm probably going to buy something like Ride maybe, or one of the more volatile stocks. Maybe Up, the Wheels Up Corporation that I mentioned before. So write that down if you're taking notes. However, I like TQQQ more this week for the simple market bounce back in mega cap text. Y'all know my edge is trading small caps. There's not as much information. You can also see where the inflows and outflows are going. I'm going to go counter to my typical hypothesis here. Straight up, very easy. Look at these earnings. When your Twitter feed of a cute real estate girl in her mid-20s that you follow posts something like this, that's where I pulled this from. Cute real estate girl knows nothing about trading or investing. Post this. Amazon, Tesla, Apple, Facebook, and Google are reporting earnings this week. What do you think the Square money is doing? Just going to put it on you like that. Yeah, it's too easy, guys. Let's follow it. Let it be an easy trade. Apple, Tesla, Amazon, Google, Facebook are all going to be up this week. Those are also known as the FANGs. If you throw Netflix in there, then you take out Google, but whatever, I don't care. TQQQ is the easiest trade. You can also buy these individually if you want to. I saw Apple post a 6% pop on either Wednesday or Thursday last week. I think that was people trading ahead of earnings. Like I always say with earnings, it doesn't even matter what the numbers are here. It just matters what people are aggregating their eyeballs to. Understanding investing is what is really mostly about understanding what motivates the average person. Earnings motivate people to buy. Okay, so we also have, this is just, you got to read this yourself. So this is the most anticipated earnings this week. Apple is on Tuesday. Visa is another one that's flying under the radar. Annaly Capital, which we all know is a great dividend play, is on Wednesday. Boeing, Facebook, Ford on Wednesday. Tilray, Weed Stocks, MO, All Street Group, favorite dividend stock of the year. Upward, Gilead, Chevron, AbbVie, Exxon. It's just an insane earnings week. If you go back 3 months ago, you'll see the same video of the same thing that I was talking about. We nailed those trades. We're going to do it again this week. My hypothesis, again, is that the tech sector is going to turn around hard and have a blowout earnings week. Remember that the Fed literally owns, and remember, I'm going to say this again, the Fed literally owns Apple, Amazon, Facebook, Google, Netflix, all of these stocks, and that's their plan on how to get out of this inflationary mess that they've gotten themselves into. All the other levers have been pulled. It's a break glass in case of an emergency, and you're allowing the central bank to spend trillions of dollars on inflating themselves out of the very inflation that they're creating by not being able to control interest rates to begin with. I know that that's relatively academic, trying to make it as simple as I can, but just understand that the number one rule of trading, and I have it on here, don't forget rule number one. This one goes out to a buddy of mine, Scotty. Scotty told me, Don't fight the Fed. I was 23 years old and sitting in an office chair at my former investment company. Don't fight the Fed. It's the best piece of advice I've ever gotten. It's also the number one principle of the Ever Bullish Advantage portfolios, my own trading, and just the Ever Bullish mission in general, and also just making you a better trader. Never fight the Fed. It's like getting the playbook before the game starts. Okay, let's look at sectors here. Sectors, communication services last week was up 3%. Consumer discretionary was up 2%. IT, moving together with IT, was up 2.77, but on the month rather, it's up 6.7. We're going to close that gap this week. That, you know, vis-a-vis, I'm telling you why I'm buying TQQ again. Consumer staples in the middle. The bottom was energy. Energy was flat. That's strange because I made money in it and told you how I did it. Utilities, I don't trade them. Utilities were down flat as well. The S&P was up 2%. Healthcare, IT, consumer discretionary and services, communication services were the only outperformers this past week. Here, look at energy and oil. Again, broken record, but stick with me. Look at energy. Oil prices dropped 5%, broad sector down 12%. That's from last week. What happened? It came back. It came back almost that full 12%. We're at $72 a barrel as of the writing of this. I thought it was going to take a month. I told you that in my last video. Go watch it. I thought it was going to take a month for oil prices to come back up. It didn't. It took less than a week. And the market hasn't caught on yet. So I'm going to get to that here in a minute. Same hypothesis on the banks. The big new change is UWMC is just on the list heavy. This is a straight on buy. I know a lot of you already own it. If you already own it, stick with it. If you want to get into something that is speculative but will make money by the end of this year, also pick up a dividend clip and do a mid to long-term hold. You can own UWMC. If you're going to do a swing trade, just buy the warrants. If you're going to do a dip trade, only ever buy the warrants. The dividend means nothing to you. I have a lot of dip traders and swing traders asking me about stocks that pay a dividend, and I say stay away from them. They're too stable. So UWMC warrants. If you're a day trader or a swing trader, the actual stock if you want to hold for a month to a year. Simple, baby, right? Here's the printout of what it is. It's at $7.66. And I want to show you this chart. Look at this chart. What's changed over this period of time? Rates fall, rates fall, rates fall, rates fall, rates fall. Maybe rates go up, rates fall, rates fall, rates fall. Rates fall, maybe rates go up, rates fall, maybe rates go up, rates fall. At some point they're going to have to go up, right? You want to catch 4.5%, 4.8% dividend yield while you're at it? That's the hypothesis. Your broker's not telling you that. I'm the only one telling you that. This is a great stock. When you make money off of it, go buy me a cup of coffee. Crude moved up to $72 a barrel. ERX. Instagram me for my trade tickets. This is a new thing I'm doing. This is the trade ticket that I bought. I bought this a little bit early. It's down maybe 13%, I think, from when I bought it. But this call option is the very one I'm trading. If you want to follow me, follow me. You know my record on option trades, so you know you are freaking welcome. Go buy me a cup of coffee. ERX, what is that? That's October 15, 2021, $24 call. We're talking leverage here. This is not for the faint of heart. This is for the diehard traders. You cannot expect this to be a low risk play. This is only for my risk on guys. You can lose all your money. You're not going to if you follow what I do, but you can. I have to put that out there. And remember, this is not a solicitation. This is education, blah, 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 blah. So follow me at Ever Bullish if you want to keep seeing these. If I don't get any more followers, I'm not going to take the time to do it. But, you know, I think it's helpful for y'all, and it's fun for me to brag a little bit and boast. So back on with CPE and MRO. Same thing as last week. When you see 30, you buy it. That's it. That's that easy. Super bullish on the oil trades. LabU, I know you're tired of hearing it again, broken record. This is the easiest free money that there is. And also remember, what happens if the pandemic picks up again? Probably some flows into biotech, right? I think so. Avenger, still a good YOLO trade. I might even take that one off. I love it. I just don't like talking about YOLO trading, and I also don't love trading penny stocks. But for those of you that do, I will go ahead and accommodate. Best penny stock out there, AVGR. You'll make 20% if you hold it for a year. At some point, it'll be down 40% throughout that year. Other times, it'll be up 100% throughout that year. It's high volatility. It's in a good market. It's a very competitive company in what they do. It's got a cool name. Never underestimate a stock with a cool name. Avenger, whatever. 2 weeks ago, remember, Remember when I said turning off the tech trades until after the shit hits the fan? Well, the coast is clear for a while and we are now back on. Remember this. Remember what we learned. We learned how to trade hedged. We learned my philosophy on trading hedges to buy small caps when we have a cranky market and go ahead and throw triple leverage on them, cash out, rebuy back into the engine of the portfolio, which is your ERX, your LabU, your SOXL, your TQQs, all of the other ones that we've got out there that are triple levered on either side. That's how you trade hedge. That's how you make money in down markets. The Sherpa, baby, taking you to the top of the mountain. This is the market map again. I put that in there because I just want to hammer that home. You got to understand market maps, and I think you guys do. This may just be me being cranky about the gentleman that was commenting on my sports analogy not making sense. So I'll forgive you. Okay. We got the scalps, we got the NVIDIAs, we got the maps. I like the semiconductors that I have listed here always, but I also like them for scalps always. But this week I actually like TQQQ even better. Okay, what happened with Bitcoin and Ethereum, right? Jack Dorsey admitted that he owns Ethereum. Elon Musk admitted that he owns Ethereum. What happened? Ethereum went up from $1,850 something to $2,151. Go watch my last video. I called it. I think this is going to hit 3,000 very likely very, very soon. So if you want to just throw everything I've said out the window and put all your money in Ethereum and be non-diversified and very concentrated, go ahead and do it. I don't hate it. I think it'll do better than the S&P 500 does over the next 5 months and over the next 1 month and over the next 1 week. Bitcoin at 35, 34 and a half. Ether, baby. I'm Ether all the way. I think that we're looking for we're just looking for the next big star here. You know, this is J-Law, Jennifer Lawrence coming out in Silver Linings Playbook. We've already got our Julia Robertses and we've already got our other hot babes. We need to find our new girl, and this is it. Okay, that sounded weird and creepy. Forgive me. If you want to beat the market next month, just buy ETHE. This is a combo of gut DeFi big players. I told you it was going to happen. It happened. That's what we do here. You know that. Okay, simple. So here's the actual written down piece. I'll probably highlight this so everybody can read it here, but I wanted to get this video out. TQQQ up. I didn't give you a lot of love on up because I gave you a lot of love on up last week. UP is entering heavy buy territory. UWMC again. CP, ERX, double buy on LabU, rinse and repeat. We've been doing this for 6 months now. I think you guys get it. For all my new guys, we've got this strategy. We got this strategy that works, and it's based on using triple leverages in sectors that we like and understanding how to pattern trade them. And that's what we do when we're not sure or when it just gets too ripe and we'd rather trade that than anything else. And as we've gained more knowledge of trading it over and over and over again and understanding the price action, we get more comfortable with it and we make more repeatable returns. Sounds good, right? Okay. And I'm trading unhedged this week. Trading unhedged. If we need a hedge, we can hedge. If biotech goes to crap, we can buy LabD, which is lab down. LabU, which is lab up. Same thing happens with TQQQ is upside. SQQQ is the short side. Y'all already know this, but some of the new guys out there, with these acronyms are very simple to follow and also very helpful when you want to trade or work yourself around a position. Okay, you guys ready for the self promo? Remember, I'm still bullish on for the last 2 weeks on FTCV. I still think that's a good one. Still think it's a big one. If you read 2 articles back, you'll see the option that I have on that. It's deeply out of the money now. You might want to buy that one now too if you're an options guy. Okay, a couple things have changed. I decided to throw another portfolio. I'm pulling out all the stops. I'm fully committed to this channel and to this company, and we're growing very rapidly, and I'm loving it. And I appreciate all the support. So now I'm going to put my money where my mouth is and speak specifically to the flaws in the investment industry that I brought up in the past. I've always wanted to create a performance-only fund. I'm no longer in the business because I want to tell you the truth, and the SEC gets in the way a lot of making individual security recommendations. So I've surrendered all my licenses, given up my CFP and a lot of other licenses and a lot of other academics that I have. Notice I never read my resume on here because I want real to recognize real. But I did that all for the purpose of being able to provide you information It is impossible. The SEC hates competition. The investment world does not want their antiquated way of investing at high fees and high cost into ignorant consumers to become popularized. So very few people will take this leap. But my leap is this. There's a secret in the investment industry. It's called the Fidelity 5 Fund Portfolio. If you buy 5 of the best funds, well-researched funds, you can hold them, and over 1 year, they're going to beat almost any managed account and damn near every single mutual fund out there with the same asset allocation. They're free to buy, they're free to sell, and they're dirt cheap. And I intimately know them. I've created a 5-fund portfolio with a tilt towards a sector fund. You might know what that one is if you follow me. And also an addition to an alternative asset class instead of bonds. 70-30 allocation is what I'm going to benchmark this against. I'm charging $249 for it. The average account size is 100 grand. The average fee is 1% before the extra expense ratio is added on. That's about $1,500 worth of fees. I'm charging you $250. I understand that's a little bit more. Transparency is key here. The second you buy it, you can put this into play. You can set it and forget it. You don't have to make any trades for an entire year. And in this case, an entire year and a half, because this is hedged into traded into going into this coming year. We're not going to charge you twice. And if it doesn't perform or beat your managed account or a growth allocated portfolio of your trading, I will give you your money back. And the reason I'm doing this is so you can take this into your advisor and say, why am I in this? And this guy, one dude inside of a house in Central Texas with a lot of experience, can build a portfolio that consistently beats the market. Why can't you beat him? Why are you charging me 1% for you to not beat him in this easy, simple, straightforward, couldn't be more clear approach? And I want you to ask him that, because now you have leverage. What do? We live, laugh, leverage. You have leverage over your advisor, and you can say, I want all of my fees back. And guess what? He's not going to give it back to you. And I am. That's the Fidelity 5 Fund Portfolio. That is the Ever Bullish mission. We're not allowed to make newsletter recommendations that allow people to reward us in the form of performance incentives. Instead, I'm going to make this, take this approach to the top. This is it. Also, we're still killing it in the Ever Bullish Balance. This is going to be more for traders, right? It's a list of 20 to 25 stocks. We rebalance every now and then. We make some trades. We got a trade coming up this Wednesday. And we've also got the Ever Bullish Dividend Portfolio, also smoking the market, 7% yield, beating the market by 2%. And it is going to continue to do so. We haven't even had to make a trade this year. The Ever Bullish Balance, the most popular allocation of all time. For almost every investor over the age of 70 is a balanced asset allocation, beating the market by 3% with no cost, no fees, no trades. How did I do it? I told you I was going to do it. We added convertible securities. We used better bonds in there or bond funds in there. We added some floating rates and we picked good stocks. I told you I was going to do it. We did it. Go buy one of the portfolios, spread the good word, challenge your advisor, take the antiquated investment industry to the table, and have an honest conversation. This is the best way to do it. Spent 5 years thinking about this, probably longer. There is no other way. And jump on the Ever Bullish advantage. Transfer that risk to me. Better yet, pull this video up in your advisor's office and ask him what his rebuttal is. So here at Ever Bullish, results are the only thing that matters. Buy one of the high-performing suggested portfolios and fire your broker. 5 fund portfolio is now out. Guarantee is out. We have a guaranteed portfolio or your money back. Guaranteed to beat your market or whatever strategy you're using with the same allocation, or your money back. Simple, well-researched mutual funds, small overweight to sector and alternative yield. That's what it is. Hold your advisor accountable. The investment industry has long since been unaccountable or non-accountable or lacking accountability to investors. They're too lazy. I'm not. Bonus content. All right, ERX, you know what it is. Bonus content's always the option trade. Thanks for sticking to the end. Thanks for listening to my sales pitch. Remember RSI, below 30 on oil stocks, just do it. If you already like the stock, just do it. Below 30 is why we take our emotions out of it. Review, Ethereum, teach back. I think you guys get the point. everbullish.com. I appreciate each and every one of you subscribers. I appreciate my sponsor, Ivy.fm. If you do nothing else, please go to Ivy.fm. I'm going to make a video on how I use them to find very deep cut investment strategies. And you can find deep cut actors, you can find deep cut Olympians, you can find whatever's going on. You can find the deep cut articles or podcasts, that is, that they are featured in better than anywhere else. And I would say probably a couple hundred times better than anywhere else. Discovered a lot more asset managers that I'm following and stealing ideas from. You can too. And by the way, download my podcast, the Ever Bullish One Podcast. Keep following, share it with a friend, share it with a neighbor, like, love, subscribe. Most importantly, buy one of my portfolios, follow one of my trades, grab me a cup of coffee as a thank you, and keep beating the market. AFG, LFG, LGR. Let's get rich. Chase, Ever Bullish. The Sherpa, baby.